Hey, princess. Hey, it's not streaming to my YouTube.
Oh,
That's weird. That's weird. I don't know what is making that noise, guys. I'm sorry. What is doing that? I don't know what is making that noise, guys. I'm sorry. What is doing that? I don't know what is making that noise, guys. I'm sorry. What is doing that? I don't know what is making that noise, guys. I'm sorry. What is doing that? I don't know what is making that noise, guys. I'm sorry. Oh, it's picking up that. I see. Okay. Well, there was a lesson that I just learned. So we were picking up the echo. I had the speakers on the screen or on my computer, and it was picking it up from the computer, and I had this like loop going from like where I'm streaming this from YouTube, and it was creepy. I thought I had a ghost. Anyway, well, with all that being said, welcome to the Russell Journal. My name is Russell Liss, and this is from 10 to a million, huh? Which I earlier joked that my odds of actually pulling this off from 10 to a million were probably about 10 to a million. So, okay. We try again. All right. So, today was a weird day in the stock market. Nothing that I predicted yesterday happened. Well, sort of. So, wake up this morning and IWM sells off, right? IWM's the Russell 2K. For those of you who don't know, that's an ETF that trades the Russell 2000. Okay. Anyway, so IWM sells off right away, comes down, bounces, starts to the head up. I catch this perfect entry, got a good strike price, $3 out of the money on a call, going to the upward direction. It gets about halfway there, and then it just stops and it stays flat basically the rest of the day. And I was just like, what? What just happened? I don't know whether it's PayPal weighed everything down or whether it was no more euphoria now that Alphabet, Microsoft, and the big and Amazon have all reported. There's no money to come back into the market because those guys said whatever it is they were going to say, and and that was it. So now tonight, looking at the earnings stuff going on, Facebook reported earnings tonight. It was disappointing earnings, and looks like Facebook is losing a bit of their viewership, or their users are kind of leaving the platform. I'm assuming it has a lot to do with censorship issues and control over privacy. I'm also assuming that there's a bunch of countries that have they've implemented stuff where it's not a good place for people to go because of privacy issues and censorship issues and owning your own information. I can't really, I could speculate all day long. The truth of the matter is I use Facebook more as a word processor now than I do ever as any sort of means to communicate with anybody. You just, most people don't need thousands of followers, some channels that are trying to generate some sort of revenue possibly do. But for the most part, nobody really needs that many followers and that many people connected to you. And most of the accounts, just a huge amount of accounts on there are so fake or scammy anyway. It's kind of a rough place to be, the old Facebookaroo. So, so, like even last year, I personally dialed things back. I'm down to like 150 people who I'm friends with on that platform, which doesn't really matter. It's just a piece of public discourse. I guess it's not really a big deal or relevant to the stock market or even necessarily to my journey. So you caught in this put or this call contract today, basically, and it cost me $11. And that's sort of embarrassing when you have a show that's called From $10 to $1 million. When you lose more than the $10, now it'd be one thing if I worked my ass off and I had a couple hundred in there and we lost a $10 trade. Okay, that's no big deal. But when that's the $10 that you're starting with, it really rubs you the wrong way. Now, we still got the 150 from my father who helped me out. And God knows I'm not going to go back and ask him for more money. I didn't ask him for this money. He basically gave it to me. So, but I will give you a look today at the account balance right here. As soon as my thing stops being all weird. Why are you doing that? Okay. This has been a weird day of weird things. I don't know. Probably ought to go talk to some of those paranormal guys because weird stuff's going on. So this is the old account balance. I'm not really happy with it, and it really sort of embarrasses me and it hurts me. I have feelings around the things that happen to me. So because I'm human. So you can see we lost $11. I could show you the account, but you'd see it says cost $10.50. But by the morning, that'll be $11. It'll be gone. Ta-da! All right. So this really leaves me kind of going, well, what the heck am I going to do now that the money's gone? Where do I go with this? And I can't quit. I want to. I'm not gonna lie. I want to stop. But I know for a fact that the problem with the trading in and the positions I've taken, it's not a problem with the market. It is a problem with me. Okay. And I am making mistakes. I am being not really true to what I'm supposed to be doing. So there's there's two things. I either quit, which is kind of a not thing that I can do, or I keep going. But how do I keep going? Well, it starts with two big things. One, get that money back. Okay. So what did I do? I went and we scrapped together through all my change drawers and everything I had and got myself. That is a picture of the exact $10 that I will be putting back in the account starting tomorrow. That's the thing I'm going to be doing. I'm going to put that in the account. Okay. Starting with an actual $10. All right. So you can see it. That is the actual money I will be depositing. The next thing that happens is really moving really into my rules and back more into the rules. So number one, filing that trade plan every day. Am I long biased or short biased? None of this like back and forth. Maybe it'll go this way, maybe it'll go that way. That's over. I'm done with that. Okay. So when I file a trade plan, we go through the 10 steps. We go, what's the price? What's the catalyst, right? And this takes me to the second very important. This will take me right. I'll go through all of my trade plans, how I do a trade plan, and when I do this, I'm usually pretty damn successful. I've been really good. I've been fortunate enough in some of these option setups that I've been in previous months where the indexes were just moving and there was plenty of volatility. And if you didn't catch it one way, you could catch it the other way. And I had more capital and a whole bunch of other stuff. A bunch of stuff that was relevant to then, but not relevant to now. And even then it was bad. I got lazy. Okay. I stopped trade planning. I lost my edge. I lost my hunger. I just was plugging into this and I wasn't being focused and serious about it. So here we go. Focused and serious, game on. Okay. If I turn into an asshole, then I'm an asshole. All right. So here's the deal. We have a trade plan starts with what's the stock? What's the price? What's the catalyst? Okay. Now, if I trade an ETF, I don't have to worry so much about the float, but if I trade stocks, what's the float? Okay. That means if you're looking for the float, what is the how many shares are available for trading? Okay. Then we will identify support. We will identify resistance. Okay. We will identify entries. We will identify exits. Okay. Then from there, we identify risk. Okay. This first part of the trade plan sort of goes to setting up how the trade is. Okay. This last part of the trade, identifying risk, is the most important part of the trade. Okay. Because the name of the game is risk management. Okay. So we go and identify how much we're willing to risk, at what level, what price levels we're willing to risk in order to stay in the trade. Okay. Now, the thing is from all of this, we're going to build a thesis. And this thesis is the next most important part. And there's three parts of the thesis. Okay. Am I long biased or am I short biased on this? Okay. One or the other. Pick a direction. Okay. Now, I need the second point is points where my thesis will be confirmed. What do I need to see in order for my trade to be confirmed? Okay. Moves above the 6, moves above the 9, moves above the 6. All right. Thesis confirmed. Okay. Where is my thesis disproven? Breaks below the 6, breaks below the 9, the 6 breaks below the 9, whatever it is. When I see this happen, I know my thesis is disproven. Okay. And if it's disproven, it means it's time to exit the trade no matter what. All right. And this is very, very key to being a good trader. And when I did this, I was a good trader. I very much so was. Okay. But now I have not been doing that. It's gotten me into the mess that I'm into. I got lazy, I got cocky, and this is where I'm at. Okay. So starting over, let's go. Let's be disciplined. All right. Now, that being said, coming up tomorrow, we are going to get unemployment numbers. This is going to be a pretty big deal considering that we got to look today at the preview for the jobs created. And they actually took away like, it was like 300,000 jobs from the created numbers. Okay. So we created 300,000 less. Now that's a little bit skewed, but we will see how the market sees as far as this being skewed. Okay. What they said is anybody who was gone from work for 2 days without pay due to COVID is considered a job that was lost. Okay. And if you listen to Starbucks's call, they had a lot of people gone from, if you listen to the earnings call, they had a lot of people gone from COVID. So again, we will see what that unemployment looks like and what those unemployment numbers look like. What we are looking for, the thing that we are paying attention to the most is we want to see signs of a slowing economy. Okay. If in the event that there are signs that, hey, unemployment is still low and it's going to stay low and there's lots of jobs for people to go get. Okay. Oh, that was one other thing. For the first time ever, we have more jobs than people looking for jobs. Okay. So this is a rare thing that has actually happened. Okay. So we have a slow labor pool, bunch of people who don't want to work. I imagine most of them are trying to do a YouTube channel like I am. Because I don't want to go back to the kitchen, and they just I'll go back. Never mind. That's not important. Anyway, so we've got a job market. All right, fantastic, great. We're looking for that. Okay. Now the reason we're looking for that is because we're looking for the Fed to raise those rates in March, right? We want to see them coming up and we want to see them getting more and more aggressive about them. Now, we will see more in February's FOMC meeting. We'll learn more about what they're doing in their FOMC meeting. That's going to mean something as to where we're going to go and stuff like that. Now, as far as we're concerned, I think we're heading into a recession, which means that I will be looking to put on a very long sort of put position. I will be shopping somewhere in the nature of 6 months out, and I will be putting on this put position, hoping to capture the entire move sort of to the downside with, again, this is my catalyst, is recession led by inflation, then followed by deflation. Okay. That's my catalyst, right, for this trade. My call or my put position is that. So then, then I will identify my targets. Okay, as far as like support, resistance, I will identify. I still haven't even identified the ticker that I'm going to put my put position on. I don't think it will be IWM this time. I think we will look for something like QQQ or SPY. Something in the nature of that. However, it is possible that I may just go long on SQQQ for a long position. This is because SQQQ shorts the NASDAQ. Okay. And so I'm thinking that if we short the NASDAQ, if you go long on SQQQ, it's like going short on the NASDAQ. Basically, what you do is you give SQQQ your money and they go take out a short position on the NASDAQ. All right. Fantastic. All right. Now, I'm also working on learning something called there's a spread that you can trade. And so I'm looking at sort of putting on a couple of spreads and not in one ticker. All right. A short one stock, go long another stock. and they hedge each other. It's like basically a hedge spread sort of thing. I'm kind of looking at doing this. I think it's very interesting, and so fantastic. All right, for me, guys, the Russell Journal. This is the Russell Journal. I'm Russell Liss. This is from 10 to a million. So, just pretend I said something cliche.